Can you walk me through your portfolio at all, Patrick? Like where are you currently and how are you positioned?
Well,
As high level or as deep as you want to go?
right now, look, the DXY, I did show you the DXY chart, but DXY, and like you're Canadian also there. It's like, I have a lot in, of course, guys, not financial advisor. I'm holding as many US dollars as I can right now because
Okay.
it's about to break out with the USD CAD is about to break to the upside. The DXY also, USD CAD tracks the DXY. It's part of it. The Euro USD, it tracks it. The DXY is about to break upwards. Like we had Brent Johnson on recently talking about the milkshake. But technically, okay, I have to show you. I don't know why I stopped sharing the screen. I should just keep it on because you guys got to look at the DXY there. The US dollar did this. Are you seeing my screen, Jay?
Yeah, yeah.
So this is the weekly chart. The US dollar. It's a coiling triangle. So the market's trying to find for a decision. It did here a breakdown. So it's a rising trend line. Guys, breakdowns are not all equal. Horizontal line breakdowns are the most important, or horizontal line breakouts, because if you get a close above a horizontal breakout line, it tells you that you have a higher high. So that's an uptrend. But it did a false breakdown here, and then it shot upwards, refusing to do a further decline through the apex on the other side. That's uber bullish. It's called a false breakdown, reverse move. It catches everybody off guard right here. That's probably when silver was really overheating, and it's just rocketing upwards. It's like even the USD CAD. Look at this thing, man. It's like that thing's close to breaking out. It's like from a huge pattern. Look at this thing here. Goodness, look at that. We could have the fundamental bearishness about the US dollar as much as we want, but that thing here, if that thing breaks out here, there's even shorter term. Goodness gracious! Look at that thing. That's higher lows, higher lows. If it closes above here, it's higher high. So we're looking at it's pretty impressive targets there. Goodness, 154 targets there for the USD CAD, which would bring us, guess what, to almost what we had at the dot-com bubble. Imagine having that, right? 155 once again.
Quick break here. This episode is brought to you by West Red Lake Gold Mines. Now, if you know nothing about West Red Lake Gold Mines, let me tell you one thing. This company was founded on the back of a transaction where they purchased the Madsen mine in northwestern Ontario in an area called the Red Lake Gold District, which to date has produced around 30 million ounces of gold from some of the richest gold deposits in the world. Now, what they paid for this mine versus what they got has led legendary mining entrepreneur Frank Giustra to call this transaction the deal of the decade. And Bob Moriarty, founder of 321 Gold, was recently on my show calling West Red Lake Gold Mines one of the two most undervalued gold companies in Canada. If you're curious why these individuals are so excited about West Red Lake Gold Mines, hit the link below to learn more. Now back to the episode.
The US dollar is a position. It's fine being there. We have there's some crypto plays there that we have also right now. If you're a trader there, you had some great opportunities. Bitcoin's running a little hot there, but I think it was like 1 week ago there. I can't remember if we had for our members there. We talked to them about the Solana trade, but it's all technical. Like the capital flows are going into the cryptos right now and Bitcoin, and they're outperforming practically everything. But other than that, it's other than for stackers, long-term investments, those are the positions that we're holding. And until that gold versus SPX chart breaks out, and because like the SPX, like you see the NVIDIA chart is so stretched, it's not a time to be, pedal to the metal, and some people say, oh, you missed out on the final top. Well, I don't mind like missing out on that because for me, whatever happens in the future, it doesn't override did I respect my trading framework? Was the weight of evidence really telling me that we had a low risk, high probability, high reward entry at this point? If the answer is no, even if it does melt up and goes up 50%, I don't care because it's always people in hindsight, right? People like, averaging down or calling bottoms. It's like only in hindsight, you're going to know that was a bottom, right? So NAV preservation is key for a trader because you know that, like, let's say you go down 5%, you just need 5.5% to break even, right? And the more you go down, if you go down, I don't know, 33%, how much you need? You need 45, almost 50% to break even. And if you go down 50%, what do you need? You need 100% to break even. So NAV preservation, number one. The US dollar is a position. It's about to break out versus the Kenyan dollars. It's fine. And if ever it starts faltering, the DXY, then just close that trade and you go into whatever currency is outperforming. But goodness, man, it's like.
So you're very patient right now. Like you're effectively, I mean, I don't want to call it sitting on the sidelines because I agree with you. US dollar is a trade, but that's your basket right now. And outside of that, you don't see any asymmetric bets. You see some setups occurring, but nothing actually that's positioned right just yet. Is that correct?
Well, uranium possibly. It's so weird. There's some uranium plays out there that are looking not bad, like Cameco is starting to resume its uptrend. There's even some oil. Even if I showed that oil chart that's about to break down, there's conflicting information because then you have the XLE sector. It looks like it's about to break out. Suncor is about to break out. It's like, it's kind of weird. Sometimes when I don't have the full weight of evidence, do I trust that breakout? It's like, it's not time. You feel it. It's so weird. How could I tell you? Like there was I forget, over a year ago, the uranium sector had just finished its 2-year consolidation or year and a half consolidation, and everything was breaking out. There was the unemployment rate was still dropping or barely moving off the bottom. It was okay. It's good. Let's lever up. Let's press the the lemon at that stage, at that moment. But right now, it's just, it doesn't feel like, I know people have the itch. They always want, to be fully invested, but we're rather defensive. And then after that, once we get those meaningful breakouts, even like JDX and all that, the miners, they hit important breakout lines. That crazy move they did off the bottom, for me, that was just a setup. I could show you I'm sure your viewers will appreciate me looking at the miners chart. Let's put the ASA chart. The ASA chart for me is it's the JDX essentially, but you have data going back all the way to the 1960s, right? I could overlay on this JDX just for people so they could see that this is actually the same thing. New price scale, logarithmic. Here, see, that's practical. It's the JDX, right? That's why I say capital flows drive this stuff. The ASA has different miners than the JDX, but essentially what drives one drives the other. So if you want more data, guys, and you say, the JDX, how did it behave in the 1970s? Well, you don't have to guess because just use the ASA chart. So this is the move that it did. This is the setup. Look at this. Look at this. Look at the reaction on this. 1, 2, 3. This is a valid trend line right now, Jay. So this is a trend line that goes back over 14 years, bigger the base, higher in space. This is crazy. This is the move that everybody wants to play, right? So this warm-up act, whatever happened here for me, that was just a warm-up act. All this move off the bottom here. And right now it's probably stretched. I'm going to put up my distance from moving average. Yeah, maybe hitting that wall, not get too greedy. So the miners, oh goodness, it's possible that they're about to lose some rising momentum here. So entering a correction. The true mind-boggling gains for me is not this here, this lower here. It's entering here and then riding all the way up. So that's a huge, huge pattern to play. And we're on the cusp. And look at these huge patterns. Guess when we had it the last time, Jay? We had it at the capital rotation event. It's like, remember the 2000 turn?
Yeah.
I know people, they love averaging down. Look, I don't want to go in too much. I could debate about it, but it doesn't make sense for me. If you're patient, you play it here and you ride that thing here. Or you could even, you could have probably here, it moves so fast there. There was probably an opportunity to play it here. But right now, this is the play of the lifetime for the miners there. If they had a chance, look, the miners are perennial underperformers. Price and gold are terrible. Maybe adjusted for dividends, they're able to hold their ground a little bit. But price and gold, the miners are just terrible. But they love when there's a recession. They love when there's a capital rotation event. They love when the unemployment rate goes up. And it's happening now. So if the miners had a chance, it's that descending trend line I drew you. If ever we get a solid monthly close after that, hopefully we consolidate a few months there to let that moving average catch up.
Yep.
Goodness, man, your channel's going to blow up 5x there. It's going to be crazy there. Everybody's going to have gold miners, but once we're above that line there.